Okay, look, I get it, right? Accounting, how boring. Crunching numbers, I just want to run my business. But look at this. Research shows that 9 out of 10 businesses actually fail because they don't understand their numbers. And the truth is that when you understand accounting, you understand your business. So in this video, I'm going to break down accounting step by step. Here's what we're going to cover: what accounting is and why it's important, the key accounting principles that you need to know, must-have accounting reports, and my favorite and one of the most important, how to analyze the financial data. And to make sure we stay on the same page, I'm going to give a couple, maybe even a lot of real-world examples to help us understand the concepts. And look, by the end of the video, you'll understand accounting and in the process, understand your business. So if that sounds good, let's get started and learn some accounting. Okay, accounting is a process of recording, organizing, understanding, reporting on, and analyzing financial data. Now, that may sound complex, but we can break this down into 3 core parts: recording all transactions, reporting with key financial statements, and lastly, analyzing the data. Now, if you go back to the definition, you'll notice how I said accounting is a process. Because it's not something that you do one time right before tax time, right? It's an ongoing system to track your numbers, monitor performance, uncover insights, and make better decisions, and help you forecast right into the future. And if you don't believe me, here's how. You see, recording the transactions shows you where you've been. Financial statements shows you where you are right now. And analysis shows you where you're heading. So to bring this full circle, let's look at an example. So let's say you run a landscaping company called Green Grass. And in the beginning, it's just you, right? And a truck. And guess what? Business is booming because you have 5-star service and clients just can't seem to get enough. So naturally, you want to expand, hire more crews, buy more trucks, take on bigger projects. But then you start thinking, how much can I really afford? How much can I really invest into the growth of this business? Should you get a loan? Should you go into your savings? What is the true cost of all of this expansion? All right, so all of that was the intro, right? Helping you to understand what accounting is and why it's important. But now let's get into the meaty stuff, the good stuff, right? The 3-step accounting process. Let's go through it step by step. And step number 1 is to record all financial transactions that happen in your business. And that process is known as bookkeeping or data entry. You see, every time money comes in your business or out your business, that transaction must be recorded. And yes, I mean every single transaction, of which there are 5 main types that you need to know. The first one is revenue, right? Most people understand it. It's the money that comes in your business from all products and services that you sell. So for Green Grass, that's the income for services like mowing, fertilizing, and planting trees. Then you have expenses, and these are costs that are incurred to run the business. So payroll, advertising, rent. Then there's assets, and those are the valuable things that your company owns. And assets can be physical, like equipment, or intangible, like your brand name. And those sweet dollar bills, cash, that's also considered an asset. All right, the 4th type is liabilities. Now, your liabilities are typically money owed by your company, right? So loans, debt, lines of credit, unpaid invoices, and taxes. And then last but not least, we have equity. Now, your equity is also called owner's equity. This would be your ownership stake in the business and the portion of assets funded by the owners rather than creditors. So you want to properly categorize each one of these transactions into one of those 5 buckets or categories. And that portion of categorizing is literally the entire foundation of accounting. Okay, so you have all of this financial data, right? Your transactions are categorized. Step number 2 is to create financial statements based on that transaction data. And I want you to think about financial statements as different views into your business. And with that, there are 3 financial statements that you need to be aware of. The first one is the income statement. The second is the balance sheet. And the third is the cash flow statement. Each one being equally important and each one giving you a different view into the finances of the business. So let's go through them. The income statement, that shows your revenue, your expenses, and your profit over a period of time. It helps answer the question, how profitable is this business? So think of that like a scorecard for your business, right? The goal of business is to be profitable. The income statement shows you how profitable it is. Going back to our example from Green Grass Company, the income statement would show the revenue that came in, the cost to deliver all of the services that we provided, and the leftover profit. Now, by comparing months and years of income statements, you can start to see the trend of your business, hopefully going up, right, in profit. Okay, so if that's the income statement, what's the balance sheet? Well, the balance sheet is like a snapshot into the financial position of your business at any given moment. The balance sheet outlines your assets, aka what you own, your liabilities, aka what you owe, and your equity. So for Green Grass Company, the balance sheet would show the trucks, the lawnmowers, and bank balances under asset. If we had any loans and unpaid bills, well, that will show up under liabilities. And owner contributions and retained profit, that shows up under equity. Okay, so now you know about the income statement, you know about the balance sheet. The last financial statement that we need to know of in step 2 is the cash flow statement. Now, the cash flow statement is important because it tracks the real-time movement of cash in and out of your business. It literally breaks down all of the money coming in from operations, investments, and finance. And for Green Grass Company, the cash flow statement helps to answer questions like, are we collecting payment from our customers fast enough? Are investments or debt eating too much into our cash reserves? Or are we investing our cash wisely, right? All important questions. And all things answered by the cash flow statement. So if step 2 is creating financial statements, that leads us right into step number 3, which is analyzing the financial data. Look, this is where the magic happens. This is where you take raw numbers and turn those numbers into insights. Insights that help you build a stronger and more profitable business. And to do that, you calculate key metrics and ratios that give you these insights. For example, your profit on the income statement shows pricing power, or the current ratio on the balance sheet assesses liquidity risk, and cash flow lets you forecast growth potential. So let's look at how Raj, who owns a tofu business, can analyze his financial data to explode his profit margins. Raj turned to his accountant, Jenny, for help. He says, look, I looked at the income statement and I realized that my profit is only 10%. And Jenny says, yeah, I see that too. And if you don't get it under control, you'll be serving yourself bankruptcy papers pretty soon. But after analyzing his expenses very closely, Jenny identifies the problem. Raj is spending way too much money on pricey ingredients from Whole Foods. His costs are way out of control. And Jenny says, holy tofu, Raj. Simply switch to locally sourced produce and you can knock those costs down by at least 30%. That's the magic flavor to boost your profit margins. So of course, Raj followed his accountant's advice and found a farmer's market with amazing, fresh, and most importantly, affordable produce. So armed with the new affordable produce, not only was he able to boost his profit margins, but he was also able to lower his prices and have better margins than before. So as the story goes, customers came in droves back to Raj's restaurant because now the prices were more affordable, but just as delicious. And within a month, Raj's profit doubled to 20%. And this, my friends, is the power of accounting and analyzing your financial data. right? Benchmarking against historical performance, past data, industry averages, and looking for those patterns and those outliers hidden within the data. But with this, you're going to see a couple of things: patterns, problems, but also potential. But the key here, especially for the potential part of it, is to start tracking your finances right now, right? Garbage in, garbage out. You need clean, clear, and concise financial data to help you make better decisions. All right, so we covered a ton of ground here. Let's go over a recap. We learned that accounting is crucial for managing and monitoring every aspect of your business. And we also learned that it's a process, right, of recording, reporting, and analyzing the financial data. And the key principles of accounting include transactions, financial statements, and analysis. I have another video where I went in depth. It's super popular on bookkeeping, right? So if you want to learn about bookkeeping for your business, watch this video next. Either way, make sure you smash that like button for the YouTube algorithm. It truly helps the channel. I'm Karan from Life Accounting, and I'll see you in the next video.